Welcome to another video on Annual Reset from freeannuity.tv. Now Jason, we've been hearing so much about these fixed index annuities or equity index annuities, and a feature that keeps coming up that I think a lot of consumers and even some advisors don't understand is Annual Reset. Can you tell us a little bit about Annual Reset?
Yeah, Joe. Thanks for asking. It's it's by far one of the most important features on these indexed annuities because what it allows you to do is get gains, lock it in, and then reset and start over for the next year. So it's great when the market's going up, but then when the market's going down, you have this reset as well. So you don't lose money, then reset at that low point and make new gains.
So that's also, I think, sometimes where people say it almost sounds too good to be true, right?
Well, it is, and of course, you know, with index annuities, there's ups and downs. There's sometimes caps on the upside, and that's the trade-off for that downside. But if we look back at the last 5, 10, 15 years, there's some huge advantages to have this annual reset.
Hey, what a segue. Let's do it. Apparently you brought along a chart, and what does this show? It shows the last, actually since 1999, 100,000 going into both the actual S&P 500 and also 100,000 going into one of these fixed index annuities. And this really, Jason, is 100% to show the value and the power of Annual Reset. Tell us a little bit about this.
Well, yeah, so if you look at 1999, well, first let's look at the S&P. Yeah, it's up. It's up at the beginning, then it's down a few years later, then it's up again, then it's down again significantly. At one point it's down to 71,000, 30% down from where you started. And like you discussed, it finishes up basically flat over the last 10, 11 years.
It's like the lost decade we all keep hearing about, right?
Absolutely. So during that same period, if you'd taken a portion of this money and put in the indexed annuity, on those years when it went up, you made gains and then locked it in. So as you're looking on this chart here from 2000 to 2003, kind of after that tech bubble and things were going down, your clients didn't lose any money if they were in an indexed annuity. And when things rebounded and things got into another bull market from really end of 03 all the way through 08, we made new gains in the indexed annuity. And of course, when things got rough in the Great Recession, as it's called, and the market's back down, here we are not losing any money in that period. And that's why you see basically steady gains or flatlining over these last 10, 12 years.
And so I think it's important to go back at this chart again and notice that when the market did tank, we all lived through the past 10 years, we know what happened. Notice how it's flat. It looks like a plateau, right? It's a flat line. And sometimes we hear that saying, zero is your hero. It's better to have a zero than a negative 10 or 20, in some cases a negative 30. And you can notice as soon as it starts going up again, that is the actual S&P 500, you start having gains again. You start participating and locking in those gains. And that's really the definition of Annual Reset.
Yeah, I mean, that's a good point. You don't have to actually make up for the losses that you had. I mean, if you were in some sort of a variable position where the market's gone down, even if you had a high watermark, you'd have to make up for those losses before you'd have new gains.
That's great. Now, for more information about Annual Reset and other index annuities, check out theannuitythinktank.com.
Thanks for watching.